Hi, this is Brian in Memphis. I've wanted to talk today about some of the job stuff, how we could help build up the economy. And basically, there's two major pieces I think that would really help. The first thing is to reduce the impact of credit cards and loans and everything else to people. So the easy thing to do would be to do an across-the-board 5% limit on all types of loans, no matter what. So that would be credit cards, home loans, and it would happen immediately. We would pick a date, and starting December 1, all types of loans would drop to 5%, no matter what kind of loan they are. Now, of course, if there's other loans that are below 5%, because I know like there's some new mortgages and stuff, that's fine. Leave them where they're at. Basically, across the board, everything would get down to 5%, because one of the big problems is, when you're running low on money, they crank up the interest rate and then you can't afford it anymore. Well, let's fix that. That's an easy one to fix. And having the banks pay for some of that, I don't have a problem with that. And then, of course, we'd need to, the consequence of that is that the banks would quit loaning anybody any money. And so you'd have to set up some kind of agency, committee, or use an existing, I think we've got a consumer protection agency. Use an existing agency that if you made an application for a loan or a credit card and you had the ability to pay, you could show that you had the ability to pay, then they would have to give that to you. They can still refuse if there's no way that you could pay. I mean, there's nothing wrong with that. But not allowing applications through just because they don't like you or you're a credit risk. If you have the means to pay and you can prove that you have the means to pay, then they owe you the right to make those loans. I think that might be interesting, but and it may not be able to be fully enforced across the board. But if you could do that, or maybe bring credit cards down to 10%, and home loans to 5%, that would help a lot of people, because a lot of the problems with most people is that they had a loan payment that they could afford, and now they can't because the interest rates were hiked up. And of course, as you have problems, they hike it up even worse, which just locks you in and puts revolving debt. And the other piece of that I would do is on long-term revolving debt, I would limit them to being able to charge you double. If you paid your debt and paid your debt again, basically 200% of the debt, you're finished with that debt. You are released from that debt. And the other piece of the jobs would be to break up the big companies. If we break up Walmart, if we break up companies that have bought a bunch of companies together, there would be a lot of job growth just from splitting companies apart, because of the ability of the big companies to reduce employees because they've merged together. A good example is HR employees. You're going to need more of those if you break the companies apart. And then I would go through systematically and look at companies that have odd combinations, like the shaving, one of the shaving companies, shaving blade companies, they own Duracell. No, those are not like, that's not from your original charter. If it doesn't fit within your original charter, those pieces need to be spun back out. Another example would be GE. They do all kinds of crap that's way outside of what their original charter was. And breaking these companies back down to their original charter would make a huge difference on how many companies are out there and how many employees. They just from reducing those numbers, you could make companies that are more manageable, and especially all the financial companies that have been merged together. Unmerging those would bring things back in line to where you wouldn't have too big to fail anymore. And just doing those two things, I think, would make me go a long way towards helping. That's all I've got today. And stay safe and don't get lost.